About a dozen of you, reached out to me in the last 24 hours or so, highlighting a call about the Great Depression coming again. So I want to talk about the framework where the Great Depression was called. I want to give you a little bit of data behind the scenes, and I want to talk about reality. Of course, we're going to talk about a lot more in this daily financial news, but given that you are all asking about Great Depression 2.0, let's get into what happened. Folks, there is a metric that we track called the money supply. There are actually 6 different ways the money supply is tracked: M1, M2, so on and so forth. M1 money supply is essentially very, very liquid. It's cash, it's checking, it's, things of that nature. M2 money supply adds savings accounts, adds, things that are liquid, but not quite as liquid. Now, also, it's important to note that money market accounts are in M2 money supply. So what happened? What is the framework for a Great Depression call? Well, the reality is that the M2 money supply, right? Liquid capital, liquid cash, fairly liquid cash, has fallen 3.94% from the peak. Now, let's just round it to 4%. Let's say the M2 money supply fell 4%. Now, if you go back and look at history, the last 150 years, it's a pretty long history, 150 years. The last four times that the M2 money supply fell by greater than 2%, so greater than 2%, we are roughly double that today, we had a depression. In fact, the last time that the M2 money supply fell greater than 2% was the Great Depression. So this particular metric is 5 for 5, or actually I think it's 5 for 5. Yeah, let's call it 5 for 5. It is 100% accurate in calling a depression. Now, let's jump in from the Great Depression to today, and let's ask ourselves just some very light questions to see if there's something unique about today that might explain a sudden drop of 4% in the M2 money supply. And then you and I can ask ourselves, are we concerned? Okay, let's do that together. So the M2 money supply falling, what might that be? Well, the first thing I would ask you to do is zoom out. If you zoom out just a hair, you will realize that the M2 money supply spiked 29% in the last couple of years. That is trillions of dollars thrown into our economy. Not only trillions of dollars thrown into our economy, folks, but remember, we were scared. Well, most of us were scared. So what does a scared consumer do? They pile up money in savings and money market accounts. So again, we saw M2 money supply do something it has never, ever done. The M2 money supply spiked 29% in a couple of calendar years. That is meaningful. That is important. You should not ignore things like that. And again, as you've probably known throughout your life, when things go up at an unusual rate, there is often something called reversion to the mean. And of course, reversion to the mean often goes the other way. Okay, so lots of money in the economy, scared consumer, stacking paper. Also, what did we see about 6 or 9 months ago? We saw a lot of us, myself included, go, you know what? I'm going to take some chips off the table in the stock market, and I'm going to get 5% in a money market or treasuries, right? Lots of us did that. But guess what has happened in the last 90 days? Guess what has happened that has caused the M2 money supply to fall 4%? Folks, we are seeing money come off the sidelines. We are seeing this dry powder get involved. Have you checked out the stock market lately? Have you seen Nvidia? Did you see GME today? GameStop? Folks, we are seeing people get off the sidelines. So this explains M2 money supply falling 4%. So at the end of the day, it is factually correct to say the M2 money supply has fallen. It is factually correct to say the last time it fell greater than 2%, it led to a depression. I believe it is inaccurate to not understand why it fell 4% for us. Again, it increased 29%. We were scared. Now we are investing in the stock market. Again, the Dow has hit a record, S&P, NASDAQ, all here recently. So at the end of the day, I do not think Great Depression 2.0 is coming. In fact, what I think we are simply seeing is money move off the sideline into investments. It really is that simple. So again, hopefully that makes sense. Again, I do not think a Great Depression 2.0 has started. Again, some people are putting out content saying it has. All right, what else is happening? Let's talk about the American consumer. Again, the American consumer is important. They are roughly 68 to 70% of the economy. We have seen consumers in the top 20% get more picky or trade down. All of these things are important to track. One article talked about American shoppers are tired of inflation. So what does that mean? That means companies like Ross Stores, TJX, Dollar General are going to be doing better. What is Ross Stores planning to do in this environment? Folks, they are looking to double down. They're looking to add 90 stores. How about TJX? TJX is planning 1,300 stores worldwide. So you are seeing the retailers that are aimed at value winning. Frankly, folks, this is what happened when we got Walmart's earnings report. Remember Walmart's earnings report talking about the number of people who make six figures shopping there has increased? So again, we are seeing the American shopper is still spending. They are just not buying Burberry or, Lululemon or whatever the high-end stuff is. What else do we have? Let's talk about the American dream. I read an interesting article talking about the new American dream, living in a single-family master plan community that was built for rent. Think about a community where you might have 500, 600, 700 homes, all rentals. We saw Build for Rent produce 97,000 units last year, 2023. That's up 4.5%. And a little bit shocking to me, I didn't know this, roughly 8% of all single-family homes produced in 2023 were Build for Rent. The actual number was 7.9. I rounded to 8%. We got an interesting economic number this morning. S&P Manufacturing PMI previously was 50.9. Again, above 50 means expansion. Estimates were 50.9. What was the actual? 51.3. Again, what these numbers are irrelevant for you and I. What we want to know is, are they trending in the right or wrong direction? So the first economic report of the week, slightly better than expected, showing slightly more expansion. Don't know if you guys saw this, but as a YouTuber myself, I don't know if you saw this, but Mr. Beast is now the most subscribed YouTube channel with over 269 million. He passed a YouTube channel called T-Series. I don't know who they are. I think they're a company out in India. T-Series. So, yep, Mr. Beast, congratulations, 269 million. Bank of America CEO Brian Moynihan is highlighted that consumers are slowing down their rate of purchase. Interesting. Again, Bank of America, credit cards, checking all of that. It would make sense that he has insight into what is going on with the consumers, with his accounts. And he is highlighting that consumers are slowing down. Again, consumers can cause a recession. If all of us get conservative, if all of us pull back even a little bit, that will compound and produce a recession all by itself. I don't know if you've seen this, but it looks like Roaring Kitty is back at it. He went back to Reddit, I guess, and showed his portfolio. Looks like he's got 5 million shares of GameStop. He's got 120,000 call options at $20 that expire this month. At the open, I think GME spiked to over 40. I don't know what it's trading at today, but man, Roaring Kitty. The question I have for you is, this is a serious question. Serious question. When does it become market manipulation? I'm just wondering. Where's the line between I'm doing this versus market manipulation? I have no idea. No clue. But certainly, Roaring Kitty can move the market. Think about it. GME closed, I think, at 23 on Friday. I think it opened at 40. All because one guy posted and his army of followers clearly came on. Also, the short sellers, I think GME had a 23 or 24% shorts as of last week. Maybe we have some more short coverings. Next up, folks, I want to give a special shout out to Jason Pritchard and the One Rental at a Time school community. If you don't know what that is, folks, we are doing a very special and unique school community where we bring you access to our millionaires that you can ask questions, you can interact with. We are also posting up thousands of dollars in courses, whether it's a boot camp or creative finance. It is there for you. Just yesterday, Jason Pritchard gave us an hour of his time. We talked about how he made $200,000 in real estate in a single month. He talked about the numbers. Folks, if you are in the business, it is not time to flip, according to Jason Pritchard. It is the time to wholesale. What the heck does that mean? Well, here are the numbers he gave us. His average wholesale made $40,000. His average flip made $20,000. His average wholesale was on the market a month. His average flip was held for 5 months. So, folks, would you rather make 40 grand in a month or 20 grand in 5 months? Again, Jason shared that. He talked about the importance of that first deal. Jason Pritchard has been doing this for 10 years. He is on my Mount Rushmore of real estate investors. But we spend a lot of time talking about that first deal. A lot of you want to get that first one. A lot of you have the interest of, you're interested, but your partner isn't. We talked about the importance or proof of concept with that spouse, with that significant other. You gotta get laser focused. At the end of the video, we talked about the 3 things that make investors successful. Focus, daily discipline, and patience. It is that simple, folks. If you follow One Rental at a Time, what does that mean? We have a buy box. We look at it. We ignore everything else. Daily discipline, 20 minutes a day. And patience. Folks, getting wealthy is simple, but it takes 10 years. I am here to help you. The community is here to help you. School is the place to be. We are now at 79 students. Folks, you need to join today because as soon as we hit 100, which may happen today, tomorrow, certainly this week, we are going to start to hold back just a little bit of YouTube content. We're going to take 1 video, 2 videos a week from our millionaires and put them only for our school community. On top of that, you're going to get the access again to interact. The next scheduled meeting is Thursday. Thursday, you're going to have the opportunity to interact with Jonathan Twomley, a big syndicator. Look at his market psychology presentation. It's going to be a blast. You will also have Bo Eckstein doing a small business summit at the end of the month, with each week giving you at least one opportunity to get your questions answered. That's what I'm trying to do with school. I'm trying to give you a platform so you can move forward. Right. My course, How to Get Started One Rental at a Time, that's on you to go through. Some of you just need a question answered. You need something done. And that's what I'm trying to do with school. So, folks, at the end of the day, I hope you have an amazing day. My goals video will go out shortly, so you'll see what last week looked like. Hint, hint, hint. One course sale, only 10 book sales. We actually had one day with 0 book sales. That hasn't happened in 5 years. Something is going on. But at the end of the day, the week was wildly successful because we had another 40 plus people join the school community. All right, folks, take care of yourself. Have an amazing day. Bye.